Good morning and welcome to the ARGENTEX Group PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all the questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Jim Ormond, CEO. Good morning to you, sir.
Good morning, Alessandro. Thank you for that. Welcome, everybody. Thank you for joining our presentation. Jim Ormond, CEO, Guy Rudolph, our CFO. Good to see you again. We last updated the market in May. You'll have seen the RNS we released in recent times, and we're very happy to update you all on our progress since our last discussions. So let's take us to our key takeouts over recent months. What we want to highlight is the business that we inherited and where we're going in the future, and make it very clear that we've got a clear vision on where we want to be, which is much more than just an FX provider. We want to be a true full-service fintech business, targeting, as we always have, the upper echelons of corporate and institutional segments. We're investing very responsibly to drive our scale, revenue streams, and subsequent quality of earnings for the longer term. And we are very focused on what our objectives are. We're fixated on returning to profitable growth. This is what will create value for shareholders in the long term. I think it's fair to say, Guy, we are thrilled with the progress that we've made so far. We've been very focused, and we've made great strides in addressing the things that we needed to fix, and fully committed to our three core pillars. So let's take you through some of that detail. Three core pillars: product diversification, geographic expansion, and operational excellence. We're getting on with all of those things. So we're building new products all under one new ARGENTEX global platform, and we're moving to one platform to support our ability to deploy a broader range of products and provide our customers with a much better seamless service across banking, payments, FX, of course, but a broader range of services beyond that. In geographic expansion, we can report very strong momentum overseas. We're ahead of schedule in Dubai, and we're on track to start operations in Australia within the next few days, which is very pleasing. So we are looking to see our first trades in Australia soon, and Dubai, we're looking to get our license approvals much sooner than we originally anticipated, which is great news. We've been very focused on running the business with rigor and control around our financial costs, and we are still generating cash, and we are on track. Trading throughout Q2 has seen improved momentum, and we're hopeful and expectant of that continuing for the rest of the year, based on the macro events that we anticipate will drive volatility, which is a key driver for our revenues. We focus on just a reminder of what transforming the business looks like in terms of timeline. This very much relates to the strategic plan we communicated earlier in the year around the three core pillars. It's not a quick fix. We are committed to the turnaround and transformation of the business, and are doing what we said that we would. But for us to be successful, we needed to focus on getting the right people into the business with the right expertise, with a very clear plan and rigorous cost control, and all of those things are now in place. We need to build and invest in new products that will all drive revenue rather than infrastructure, and accelerate into profitability from there. So this year was all about being a fixed year. Next year and into 26 was about building and deploying those new products and into those new regions, and 27 and 28 onwards was where we really start to accelerate into sustainable profitability. In terms of a simplistic overview of that product diversification piece, we've always been very focused on being an FX business. We dipped a toe into banking with virtual IBANs, but going forwards, it's our intention to be just as expert in banking and payments, on an international basis as we've always been in FX. So we will have 3 strong pillars to our revenue generation going forwards. Our broadening of those revenue streams will also look to improve the quality and predictability of those earnings, which is something that FX alone doesn't necessarily carry, as it's so related to market conditions. I think this simply illustrates where diversification, where quality of earnings, and where sustainable accelerative growth will come from, with a much better customer proposition, highly competitive offerings, and is finally delivering market-leading products and resources rather than being behind some of our competitors, which is not where we intend to be in the future. Simply, geographically, we've already got a successful business in the Netherlands, which has been trading since 2022 and is our passport into the rest of Europe. There are e-money business there. But as I mentioned earlier, Australia, fully licensed now. We've been granted all of the regulatory approvals that we need there, and we're expecting to trade in the next few days, not weeks or months. Dubai, that process has gone incredibly smoothly. We've got a great team that's connected already out there, gone through the pre-approval process, and we're expecting that license approval to come through in coming weeks. So we're in a great position in both of those new territories, and we will continue to be opportunistic, but also sensible in our investment in building out those European opportunities as we invite new teams of quality to join us in coming years. Operational excellence. I think I've talked about this a lot over this last year. Flat headcount, despite investing heavily in growth areas. So in effect, the underlying business is now operating with less people than it did, and will continue to be highly focused on rigorous cost control, including our headcount. License efficiencies and getting the best out of our suppliers and liquidity are all intrinsically linked. It's about corporate structure. It's about how we represent our clientele, both on the MiFID regulated side of the business, but also in terms of e-money. And liquidity is an integral part of getting best price and service from our suppliers by becoming strategic partners of those tier 1 banks, rather than merely treating them as providers. So I think there's lots that we can do there. We're already seeing good results. And recently we've had a significant amount of collateral returned to us by our one of our main tier 1 banking partners, who understand the journey that we're on, who want to support us, and who are there for us as we grow into a much more global business. Let me hand over to Guy to talk through some of the financial highlights.
Thanks, Jim. Just a few comments on the headline figures before I jump into each of the primary statements, where I'll talk more on revenues, profitability, cash, and the balance sheet. In terms of highlights, revenues of 23.9 million, 4% behind the prior year. But as Jim said, and as we've said in the RNS, we have had good momentum from June into July and August, and at the end of August, we're broadly in line with last year. I think then if I focus on the bottom 2 boxes, our teams continue to win new business, and more clients trade in this half of the year, and there is strong operational momentum. As I commented in May, we'll also had a question on this preloaded, which I'll come back to at the end. The mix of spots and forwards has changed since last year, and that revenue has been impacted by the mix effect of that, where we make less money on spots than we do on forwards. And generally, as we see volatility increase, we'll see more money, more trades in forwards.
Just to highlight that underlying point on those trading numbers in terms of clients and volume. To be clear, we are not losing clients to competitors. We are increasing the number of clients that we are doing business with year on year, and also the volume of transactions that those clients are trying is increasing. It is only that product mix which is suppressing revenues and preventing us from growing as quickly as that we would like, just on the FX side of the business. But to be clear, the underlying fundamentals are very strong.
Thanks, Jim. So I look at the P&L, as I commented earlier, starting at the top in terms of revenues, we had a weak Q1. January and February were disappointing months, but that we had a stronger Q2 through April, May, June, and that momentum, as I just mentioned, has continued into Q1. So really the gross margin level, which is, we've stayed consistent year on year, 72%. I move down and the line that's highlighted, we have seen, and something I have inherited, a very significant increase in staff costs. But just to pick up on this, the point that Jim made, headcount is 30% up year on year. But at the end of last year, 31 December, June, we had 196 people in the business. That number was higher when I walked into the business at the end of January. We closed June with 195 people. One head down, and you'll say one head, big deal. But let me explain in there's some movement. So we actually invested and put people on the ground. We've increased our headcount in Australia, and we've built a team. We've got the genesis of a team by the end of June, the start of that team to build an alternative banking platform. So we have controlled heads in the last 6 months with the effectively reducing and removing through natural attrition in H1 and those heads with focus on that. And I just want to be very, very clear that as we move into H2, as Jim mentioned, we're going to have exactly that same principle. But any headcount increase that will come through will be people who are building product and operating areas which will generate us more revenues.
Yeah, we are entirely focused on revenue generation in terms of where our investment is being put. We are not investing in the underlying business other than bringing our technology up to speed.
That brings me down to the reported EBITDA number. Obviously, a very significant drop from 7.2 last year to 0.7. So on the next slide, which is probably the most complicated slide in here, really look to explain that movement in that. So I'm normally a pretty linear and logical kind of person, but actually on this one, I'm going to start on the left-hand side of the dumbbells or on the curve, and then start right hand and then explain the middle. So I take you to the left-hand side last year at 7.2 million. So as I come in here and unpick the numbers, last year, that first half benefited from £1 million worth of credit and provision releases that are not repeating and haven't repeated this year. So our underlying last year was 6.2 million. If I move to the right-hand side and our reported revenue of 0.7 million, first half of this year has been impacted by £1.4 million of one-off restructuring charges as we performed a strategic review of the business, and there's been changes to the senior management team. So that really brings us to an underlying of 6.2 to 2.1. And I'm not going to shy away from the fact that is a really significant decrease. Let's just talk through the elements and the building blocks of that so that everyone understands them. The first part of that bar, 0.9 million, was the investment in Australia and Dubai. In that first half, we spent 1.3 million versus 400,000 last year. And both of those investments will start to generate revenues this year, although at very low levels, and obviously give us opportunity for revenue growth in 25 and 26 and beyond. The second piece of bar there, that 2.4 million, really is the impact of the increase in headcount, which we mentioned, 2.4 million, and that continues and has been this year and will continue into H2 and beyond to be a key area of us controlling those costs, making sure that incremental headcount is only to support growth areas. The last part of the bar really is the impact of having lower revenues this half than we did last half from the 25 versus the 23.9 million. And that's the fall through to profit. But we still did generate positive EBITDA, and that's probably a nice segue to move me on to the next slide on cash flow. So despite lower EBITDA, we have remained cash generative. And if we come down here, you'll see, and I'll just highlight some pieces, obviously significantly less CapEx in this first half than last year. Last year, investments in premises in the UK and in our head office here and also Amsterdam. But coming in the first half of this year, controlled CapEx very closely. Of that 0.3 million, that 0.5 million, 300,000 into our existing technologies, making sure they're maintained and enhancing those, actually ready to support go live largely in Dubai and Australia, and 0.1 on the new alternative banking platform. That brings us down to generating free cash flow of 2.2 million. And then the equity raise that we did in May of 3 million, so net cash flow of 5.2. And closing net cash of 23.5. So that sort of brings us nicely onto the balance sheet where you can see that cash. And I'll explain the cash a little bit more. There really isn't much to explain on this balance sheet apart from the cash. If you look at the top of the deck, this slide, you'll see some 48.2 million, a big increase, and that is cash which is on our balance sheet. But the table, to really help us understand that, I've really broken that down. So in that 48.2 million, is segregated client funds of 24.7 million, which is money that whilst we have to show it on our balance sheet, so the other side of that is in creditors, and it's not our money. So underlying our net cash is 23.5 million. But of that, because we are a MiFID regulated business, just over 16 million is what we're required to hold at any one time by the regulator, which ensures that should events go badly, we could still settle all our trades, etc. So what that really leaves is 7.1 million pounds of cash headroom above our liquid asset threshold requirement, which is the money that we are using to generate all those FX revenues of 50 million, and that amount of news. But I think it's really important to think that, because people say, well, if you've got 23.5 million of cash, why did you raise 3 million? Well, the reason we raised the 3 million is that's what we think it will cost us to build the alternative banking platform, and we need to maintain that headroom to be able to keep our trading.
What this does show is, compared to previous years, there is a healthy amount of client money that we're showing on the balance sheet, which is reflective of the overall increasing volume that we're trading as a business. And the red cap provision that we're making is similarly a reflection of the investment that we're making in the growth areas. So this is a very normalised balance sheet for us. But actually, in terms of outright cash position, this is as healthy as this balance sheet has looked for a long time.
Yeah. So just to summarise those financials before I do hand back to Jim, we're performing in line with guidance. We're cash generative. We've got a strong balance sheet. We're controlling costs and we're investing responsibly as we transform this business so that it has diversified revenue streams and can deliver sustainable profits. So we're in a good position looking forward.
Yeah, well,
Jim,
thank you, mate.
We're
Optimistic. We've always been positive about the opportunity that sits before this business, as have the board and now our stakeholders, who I think fully understand the journey that we're on. Our major shareholders and our board are fully behind these strategic plans, unanimously so. We're engaging properly with shareholders, and we will continue to ensure that we do that, to make sure that they understand the laser focus that we have on cost control and the fact that we're investing only in areas that can drive sustainable and reliable profitability for future years. We're absolutely on track, not just in terms of guidance, but with our progress as a business operationally. And we are fixated, genuinely fixated, on putting ourselves in a position where we are a market leader, not a market lagging fintech business. We are seeing a historic coalescence between banking, payments and FX in a way that the world has never seen it before. And we must put this business in the best possible place to take advantage of that opportunity. That's what we're doing. We're doing what we said that we would. And the results are demonstrating that we're bang on track to deliver the future value for shareholders that we've committed ourselves to. Thank you. Very happy to take some questions. That's the end of the formal part of the presentation.
Jim, Guy, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. As you can see, we have received questions already throughout today's presentation. And Mark, at this point, if I could hand over to you to read out the questions, that'd be great. And I'll pick up from you at the end.
Hi, it's Mark James here, Director of Investor Relations. I'm going to endeavour to get through all of these questions, but just, please do keep them coming. You can also contact me afterwards on mark.james@argentex.com, or indeed any one of us at investorrelations@argentex.com. But we'll endeavour to go through all of them. There's a first question here, and there's actually two or three of them. Really, comparing our revenue growth with that of some of our competitors, notably Equals and Alpha, and I'm trying to understand what the differences are.
Yeah, no, I'm happy to pick that up, Mark. And it's a very good question. It's actually not quite possible to do an exact like-for-like comparison, but the observation I'd make, they have really built substantial businesses alongside their core FX businesses. And they need to be congratulated. And as you've seen from our strategy, we're embarking on that similar journey. So I think if you pull back the first layer of the sort of the results on equals, for example, you'll see that their FX business grew by 2%. But actually that 33% growth they had, which is absolutely to be commended, is around fees and interest on their other banking product services they're going to do. And with our competitor Alpha, who have also obviously had a very successful business, I think if you unpick the growth in their numbers, it's slightly more opaque and harder for us to do that comparison because of the way they publish their numbers. You will see that there's higher elements of their growth coming from their non-FX businesses.
I think it's fair to say, what's that phrase? Plagiarism is the finest form of flattery, and we salute those businesses. I think Morgan and Ian run very good businesses. I'm very respectful. We all are respectful as a team of what they've achieved, and to an extent, we are now going on the same journey, but with ever more vim and vigour than I think we could commit to previously. So I don't think we'd want to disregard their performance and growth, and we hope that we'll be in a position to head in the same direction when we've built our own product suite that we're coming at with a view to being competitive and market leading in the quality and capacity of those products.
Yeah. And actually, there's another question here which I think ties into this product diversification, guys. So, how do you go about increasing the stickiness of your customer base?
Ben S, thank you for that. We'll share it, shall we? Yeah. I think just from my perspective, great businesses are built on the back of providing great customer service, and I don't think we should be differentiating our offering in the market on price, although price is always a consideration. And it's really hard not to do that when all you have is one set of products, FX products. So I think by providing more value, attracting more wallet share, to use that expression, delivering more products that our customers really, really want, but also providing, all of the services as well or better than anybody else out there, combined with what we've always done well, which is relationship-based, bespoke white glove brokering. And I think we have a great chance of being a business that the market and our clients will continue to expect.
Yeah, and I think that's obviously the future, that to sort of to deliver more to our customers. But actually, what are we doing about the now in terms of improving stickiness? We put in Salesforce as a CRM platform, that's a customer relationship management platform last year, and we are using that and deploying that and becoming significantly more sophisticated than we have been historically about how we interact with our customers and understanding their businesses better, so that we are more effective, and we are absolutely, I think, on that journey becoming significantly more focused on, if any of you worked in some similar adjacent industries, customer lifetime value. And I, for one, am a disciple, is much, much better to continue to farm and harvest the customers where you build those relationships, rather than fishing for new ones where the quality and ability to serve, quality of the client and their ability to serve is less. So we are, like I say, investing, continue to invest how we use our CRM tool to do that and to become more sophisticated, KPI driven, and better understanding our clients' businesses.
Moving on, there's one or two questions really. We've talked in the RNS and the deck to ARGENTEX global platform. Questions asking what the benefits of that are anticipated, both in terms of revenues and costs.
No problems. I mean, there's a few elements and layers to this, but the platform that we inherited was a monolithic platform. It was not scalable, and it was backed by a significant list of manual processes. What we are now building is a global platform where automation is front and central to everything that we do, both in terms of our capability to offer customers a more seamless experience, but also our ability to scale without adding extra human resources all of the time. So efficiency is at the very heart of our thinking in all of the architecture that we're putting together. That will matter in the long term. It will allow us to deploy a wider array of products on a very real-time basis. We'll get products to market faster with international footprint, and it won't matter how big that international footprint gets or how many products that we deploy. The platform that we are building now will allow us to do all of those things without adding lots and lots of processing people behind to try and keep up with that deployment. So it's front and central to everything we do.
There are one or two questions really focusing on the overseas expansion. So, what, for instance, how do some of the overseas territories differ from the UK? Where do we see the opportunities in other areas? And why is it such an opportunity for us?
So I start and hand over to Jim? I mean, I think, look, the first thing is that the Australia. Let's start with Australia, where we will do our first trade. We will do our first trade next week. The systems will live to go. It's a wealthy market. It's an import-export market by the nature of what they do. There, if you go out there, obviously they need FX services for every country they deal with, unlike many of our European customers, for example. So there's demand there. The other thing as well that is fair to say is that we have a license there that will allow us to do forwards, options, and deal with all clients. It's taken us 3 years to get that license, and it's a very heavily regulated market where we think the banks have had a relatively protected environment for some time. So we see there's significant scope and opportunity there, and really the question of how fast we can grow. I think my observation is we've created we will put in place both in Australia and Dubai teams that are able to be sustainable, and they will grow, but their growth will have to be funded by their revenue growth. If that makes sense. So we in Australia will have a team of 12 people by the end of this year, Dubai of 7. And then the growth of those teams will only be driven as we see the revenues come through.
The other point of the technology we're bringing into the business is to allow us to focus much more on front office and revenue opportunities in those jurisdictions. Whereas I think historically, certainly in the Netherlands, the whole point of going to Amsterdam was a licensing decision to give us that passport opportunity to Europe following Brexit. So Dubai and Australia, APAC and the Middle East are hugely wealthy areas. They're areas where brokerage houses like ours have not traditionally spent money and the immense amount of time it takes to get licenses in those areas. So there is an element of being first to market in our approach, but also we're not just going there to get a license. We're going there to actually be a revenue driving contributor to the business long term. And I think perhaps Amsterdam was a slightly different lens that was used in that original placement. What it does allow us to do as a Netherlands hub is, of course, then open more branches across Europe where there are bigger market opportunities. So I think in coming years, focusing on places like Germany, Italy, Spain, potentially France, I think these are all well-trodden territories that brokerage houses like ours can do very well at, particularly if you have the capability to offer a much broader suite of products than many of our competitors.
We have another one from Ben S. Thanks, Ben. Do keep them coming. We're very keen to be as candid and open as we grow this business. Please, can you talk about the changes of the senior management team, more specifically the new people bring to the table to improve the business?
I'd like to be quite simplistic, I think, in our response to that. At the end of the day, we were brought in to transform the business, and I think it's entirely appropriate to recognise that the co-founders that originally brought this company to market had done a fantastic job in building a 50 million platform, and we're respectful of all of the work and effort that took them to that place. What the new team has in spades that I think is perhaps different to the prior team is broader experience and more senior experience across a much wider spectrum of business practice. So simply, it's experience. We're all permanently committed to the opportunity in front of us. We see it as significant. We're very passionate about it, and we will bring our experience to bear as a team with very much a can-do attitude, with, if you like, no nostalgia around how we look to the future and how we look to build shareholder value.
There's one or two on really the competitive landscape, which I've grouped together because we think there's a huge opportunity. So if I group those together and ask you for a few words around how you see the competitive landscape and the scope to grow.
Well, I mean, we've touched a little bit on some of the businesses that we're very respectful of, but it is an enormous market, whether you're looking at FX, banking, payments, and more importantly, the coalescence of all of those things, which opens the market opportunity even wider to brokerage houses like ours that are looking to become more technology focused. So I think the mainstay of the business that we are taking clients from is, of course, the mainstay banks. You know, the banks have always done most of the FX, most of the banking, most of the payments, and that's where the business has traditionally resided. But we are more fleet of foot. I think we have a capability to offer better service in some of those underserved areas. And we're educating those clients as to the opportunity that sits in front of them if they are to come out of that rather comfortable banking environment. But to do that, you know, certainly in a regulated environment and as a regulated business, you have to be able to be very credible in your offering to customers. So I think it's largely coming from the banks, but there of course is, you know, a significant percentage that's held by the private brokerages, whether they be payments businesses or technology businesses or whatever else. We need to be better than them in terms of what we offer, how we retain, and how we serve, and that is our mission.
There's a question here which I think goes to the heart of sort of, you know, the need for automation versus sort of manual processes, and, you know, how much do we think going forward will it be bringing more automation and self-service into the business?
I think we've covered it to an extent. You know, the whole platform focus is about driving towards efficiency, as we are for the rest of the business. Have you got anything else to add to that?
No, I just think that one of the key decisions about how we looked at the technology and you know, that building our ARGENTEX group platform is that it's not monolithic, and we're going to be able to build a structure which allows us to use APIs, but ready built interfaces with other products and services that are out there. So at the moment, for example, you know, when we have to do payment screening, you know, there are third-party providers who provide that. Well, that actually now will be able to occur seamlessly in one system, rather than us having to take data from a system, load it up, feed it in, come back. Well, that take data around to a system, feed it in, load it up. We're just using this little vignette as an example, is a manual process. Because to build an interface into a monolithic system is hundreds of thousands of pounds. So whereas when you're operating now, building with ready-built APIs, the cost of plugging an API in is £1,000 type pounds rather than hundreds. So there's absolutely in the design principles of what we're trying to get to.
Yeah, we're trying to future-proof everything that we do, and I think it's probably worth saying, before somebody asks it, because you haven't done yet, but you ought to. The architecture and the framework, the way that you go and build a new technology platform, there's always a question around risk. You know, how do you mitigate the chance of versioning budgets or the chance of, you know, delays to that deployment? Because when you're building something from new rather than buying something off the shelf, clearly you've got to commit to all of that. The only way you can mitigate it, frankly, is to hire people that have played, and a very important part of the investment we've made in alternative banking, but more importantly, the global platform per se, is in the team who are taking responsibility for driving that technology platform forward. And that's a reflection, by the way, of the quality we already had in the business, which we were very happy to come and inherit, but also the overlay of new talent that we brought into the business. And we now have a fully integrated one team of technology leaders and experts that together are building this new global platform for us. So I don't want you to think there's this sort of that was then, this is now, because what we've actually done is take the best of what we had, and we've added that to that experience and expertise to make sure that we give ourselves the very best possible chance of deploying on time and to budget. I can say with absolute sincerity that we're approaching our first technology milestone in terms of our internal KPIs, October the 1st, and we are ahead of schedule. I'm very happy with progress.
And with that, I think that's pretty much all the questions that we have on the screen. As I said at the outset, do please continue to engage. We're easy to reach. And with that, I'll hand back to the moderator.
Thanks, Mark.
Thanks, Mark.
Perfect. Jim, Guy, Mark, thank you very much for answering those questions from investors. Of course, the company can review all the questions submitted today, and we'll publish those responses on the Investor Meet Company platform. Just before redirecting investors, provide you with their feedback, which is particularly important to the company. Jim, I was just wondering if I could ask for a few closing comments.
Thanks for that, Alessandro. It's nice to see not a question, but thanks for us to be open and communicating with shareholders, in a very candid and forward way. So thanks, Ben S, for that comment. It's appreciated. It's probably one of the most difficult jobs to come into a business when you are inheriting it from co-founders. Sorry, our screen's just gone. In case you can still hear me, but we take our engagement with shareholders very seriously, just as we do with staff, just as we do with all external stakeholders. Be assured, we review your comments, we review your questions, and we welcome them, and we're happy to answer them both now and in the future. We've got a plan we believe in. Thank you for your support.
Yeah, thank you.
Jim, Guy, Mark, thank you once again for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected? Provide your feedback and all the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of ARGENTEX Group PLC, we'd like to thank you for attending today's presentation, and good morning to you all.
We'll see you next time.